Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Twitter puts up yet another warning on a tweet from President Trump. This time, the president tweeting that if protesters in Washington, D.C. try to set up an autonomous zone, they'll be met with, quote, serious force. Twitter saying this violates their policy against abusive behavior and the threat of harm against an identifiable group. The president posted the same message on Facebook. It's still up there, unchanged for now. We'll be watching to see if that changes. This after the president suspended temporarily visas that hundreds of thousands of workers used to work in the United States from other countries. This including the H-1B visa used widely for immigrant employees in Silicon Valley. We'll talk about that later in the show. But first, let's get a check of the markets ending the day slightly up. Despite all of this political commotion, our Abigail Doolittle has been watching the back and forth. Abigail, investors again looking past the bad news. Why?
For the most part, they are looking past the bad news, although we'll be looking at beneath the surface in just a moment. So on the surface, yes, a relatively risk-on close. Stocks higher for a second day in a row, but the close itself in the last couple of hours, not so great. At the highs, the S&P 500 and the NASDAQ up more than 1%. On the close, the S&P 500 up just 0.4%. The NASDAQ, of course, closing at yet another record high. And that has to do with today's strength, which were the stay-at-home stocks and the stay-at-home sectors. So Apple and Amazon both at another all-time closing high. Amazon, if you can believe it, up for a seventh day in a row, the longest winning streak since July of 2019. So the stay-at-home theme has reemerged. There were a couple of weeks there, Emily, where the cyclical sectors were doing a little bit better on the idea that the economy was going to be reopening. But as the virus has started to spike in certain areas, hotspots, creating fear, we do have the stay-at-homes doing just a bit better. And in fact, over the last 2 weeks, the overall story is actually risk off. The S&P 500, since these new cases have emerged and fears that perhaps it's going to hurt the economy, the S&P 500 actually down about 2.4%. This as the haven yen is up, and we also have bonds higher. It's going to be interesting to see how the virus data continues to play out. If it continues to build to the negative side, not only will that be sad for our country and for the health of those affected, but it could certainly continue to take the financial markets in a risk-off tone, which is very subtle. It's under the surface because while you have this happening, of course, you have that NASDAQ at an all-time high. Sort of a tough puzzle to figure out, Emily.
Meantime, Abigail, a number of the stay-at-home stocks getting nods from analysts, including Etsy, which, of course, has been critical in providing people across the country with masks, handmade masks. Talk to us about what you're seeing there.
Very nice home handmade masks, I should say. And that stock is
I have a few.
Yes, they're very, very attractive. And for real, they actually are really quite nice. That stock has been on quite a tear itself, up 8 days in a row, the best, longest winning streak in more than a year. Today, Goldman Sachs raising their price target to a street high on this, I believe, 120, saying that they can expect this trend to continue. The numbers really, Emily, tell the story. For the second quarter to be reported at the second quarter, the June quarter, growth for the top line is expected to be, I believe, 80%. Bottom line, 200% growth. So if those numbers come through, the price targets being raised, not just at Goldman, but other shops on the street, will really be justified. The bigger question here for these stay-at-home stocks, especially these specialty online retailers, which on the year are absolutely soaring, is this going to be a secular change? Is it going to be just a near-term pop from someone like me, where I've just started really shopping online in a more serious way because that's the really been the only option for a little while? Or will someone like me continue to go online? I will probably stay online. So if I am any tell, it could be more of a secular shift. And it seems like some of these analysts are preparing for something bigger along those lines, Emily.
I'm with you, Abigail. We'll probably stay online as well. Thank you so much for breaking that down for us. Meantime, back to the president's move on immigrant work visas. The president signing an order Monday temporarily halting several work-based visas affecting hundreds of thousands of foreigners seeking to work in the United States. This move has been widely condemned by tech leaders who say this will hurt the economy. To discuss now, we're joined by Bloomberg Shelley Banjo. So, Shelley, first of all, just how temporary do we believe this will be? And what will the longer term impact be, given that there are obviously so many people using these visas across the United States and especially in Silicon Valley?
That's right. So about 3/4 of the specifically H-1B visas go to tech workers. And by some estimates, this could affect between 325,000 to 500,000 people just right now. But the long-term effects, as you alluded to, I think go much deeper. You're thinking about all those students who have come to the U.S. or who had wanted to come to the U.S. to get computer science and engineering degrees, PhD students who might no longer want to come to the U.S. anymore.
So talk to us about, this in the context of, new pledges that we're seeing from Facebook and Google about diversity, at a time when, we can't even, these companies can't even keep some of the workers potentially that they have who've come here from other countries.
Yes, I think it's hard to make these pledges just because of the situation that we're in right now with the economy and high unemployment numbers across the country. But I think what people need to remember is that tech isn't experiencing the same amount of job losses and unemployment that the rest of the industries are. So a lot of these tech companies are still hiring. And particularly for the highest levels of talent, for the most experienced and best sought after engineers and computer scientists, and so that's the area where I think that they really can impact change. But we've seen a decade's worth of these pledges by tech companies to really increase diversity, and they haven't really followed through with that.
Absolutely. The numbers have been barely budging, and if they're moving slowly. A couple of tweets from Silicon Valley leaders. Tim Cook saying, like Apple, this nation of immigrants has always found strength in our diversity and hope in the enduring promise of the American dream. There is no new prosperity without both. Deeply disappointed by this proclamation. And Elon Musk, CEO of Tesla, saying, very much disagree with this action. In my experience, these skill sets are net job creators. Visa reform makes sense, but this is too broad. Obviously, there's a lot of uncertainty ahead. We don't know which way necessarily the economy is going to turn. You've got this order seemingly out of nowhere from the president as these companies are facing, not just an economic crisis and a health crisis, but a social crisis as well. How do you imagine these companies are going to continue to try to tackle these issues from the inside as they're thinking about a fundamental rethinking of how their workforce is shaped?
I think it's going to be very hard for tech companies right now who are going to want to keep hiring folks from other countries, because if you look at the amount of people that are coming and applying to their jobs, if you talk to somebody who might be the most talented person, but probably, maybe equally talented as somebody else, you're just not even going to go down that route with them to try to even apply for some of these visas. And I think that will really set off long-term talent issues. It will also dissuade companies and startups from starting in the U.S. in the first place. You're hearing a lot more from startups who are moving to what they call distributed teams, which is, I don't really need to even bring you to the U.S. anymore. I'm just going to keep you, in China or India, and not necessarily even, move you to the U.S. in the first place. And so, we don't really know what the long-term effects of that is going to be. You have all these CEOs and executives, like you said, coming out over the last few years, over the last few days, denouncing this. But the question is, what action can they actually take? What can these tech companies actually do? Are they going to try to hire these folks, or are they not going to think that it's worth it from a political angle?
All right. Well, this is something we're going to continue to discuss throughout the show. Bloomberg Shelley Banjo, thank you so much for joining us. Later in the show, we're going to hear more from Airbnb CEO Brian Chesky, who talked a lot about new efforts that they're making to improve diversity, setting new targets, essentially quotas. We'll hear why Chesky thinks that's important, and we'll have more of Bloomberg Technology after this quick break. There's been so much speculation about where the economy goes from here and what recovery looks like, if indeed the economy does recover. Earlier today, Steve Schwarzman, the CEO of Blackstone, the world's biggest alternative asset management firm, said he sees a big V in terms of the shape of the recovery. He spoke with our own Jason Kelly earlier. Take a listen.
You'll also see a big V in terms of the economy going up for the next few months because it's been closed. And as people are allowed to go back, the economy will really respond a lot. But there's only so much the economy that's highly complex can respond, just because not all things go up equally, and it will take quite a while before we sync up and get back to 2019 levels.
So, Steve, when I think about your experience, I know that Blackstone is a place where you're always looking at opportunities and new opportunities in many ways. I think back to the turn of this century and the big bet and a lot of investment you made in real estate. I think about the last financial crisis and how heavily you invested into credit and distress through GSO and other means. What's something that you're doing now? Take us inside Blackstone that might help us understand the opportunities that exist in this latest crisis.
Yeah, well, this one's different. They're always different. And, you know, the easy things to have been doing was, you know, when you hit that bottom, even if you didn't know it was the bottom, to be making significant investments. We reported just at the end of the first quarter that we'd invested $11 billion in effect liquid securities. And that's, of course, had a very happy outcome. And you know, we did more in addition to that. And that's sort of a first stage. I think each of our businesses are now seeing interesting opportunities. And you know, as technology is changing things and people are staying home more, the areas where you'd want to invest, whether it's technology or healthcare, are being modified. Certain older economies that are bound to be disrupted, those types of companies are places where, unless you have a really remarkable management, you'd be wanting to stay away from. We can see different parts of the economy opening faster. Some things were closed completely. Interestingly, in the hotel business, we owned one hotel in Las Vegas, completely closed. The first weekend it opened, it was 45% filled. That's an astonishing thing because Las Vegas was barely open. So there will be some surprises, not all hotels, but as you look at the gradation, places where you can drive will recover much faster. Places where you have to fly will recover much slower. And if you have to fly over oceans, those will be the slowest recovering types of investments. So each of our businesses is starting to really put out money, our business lines, and there's a much better tone. To do a lot of private investing, there has to be some confidence on both sides. Sellers have to believe they're getting fair value, and the people who are buying think they're getting fair value. So there's an overlap. Typically what happens, as you know, Jason, if you're doing private investing, that sellers don't like to sell at bottoms. You can buy liquid securities, you can buy debt securities of CMBS and other things that are stacks where you can, you know, find the security where you think it has the most upside, even if it's gone up halfway from where it started. Some of these will continue to go up, and others have already returned to par. So it's an issue of figuring out which of the underlying businesses are going to return to health.
Steve Schwarzman there with our own Jason Kelly. Coming up, more on Silicon Valley's big pledges on diversity. We'll talk to a Silicon Valley insider who knows something about this, former McAfee CEO Chris Young. All too often, we hear the words diversity and inclusion brought up as pillars of the American workforce. But if you look closely, signs of progress are scant, especially at some of the biggest companies in Silicon Valley, despite pledges for progress otherwise. One person familiar with the industry's struggles is Chris Young, the former CEO of the cybersecurity firm McAfee. In January, he left his position at McAfee to join the private equity firm TPG as a senior advisor. He is with us now on the phone. So, Chris, first of all, got to ask you for your overall reaction. Obviously, we've seen, renewed momentum behind the Black Lives Matter movement. That's led to protests across the country. That's led to discussions in the workplace about what they can and should do better. Do you feel like now is a moment that will lead to real change, or will things just drift back to usual?
Thanks, Emily. Clearly, the unrest we're seeing across our country today is really an outpouring of emotion that's been built up over, unfortunately, not just a few weeks, but over years. And in some ways, I'm encouraged that so many people are coming out in support of the Black community across not just the tech industry, but really across all industries, sports, you name it. And I do think it's an opportunity for us to drive some real change. But I do think the risk is in the second half of your question, which is using this moment as an opportunity to drive sustained effort to create change, because this isn't a problem that got created in a matter of years. It's a problem that we've had for a long time. And so it's something that will take a while and many years of work and focus to fix and to get to a place where we truly feel that we have diverse as well as inclusive workforces as it relates to African Americans and other minority groups.
Now, you stepped down as the CEO of McAfee earlier this year, and I couldn't help but notice that you were replaced by a white man. What happened there, and what can you share in terms of your personal experience with these issues?
I would say, my leaving of McAfee was more of a planned thing, so I don't think race really was something that was involved in that decision. But I can tell you that, over my career, and this is something that as I talk to my colleagues, my friends who are also Black executives, we all face a lot of the same challenges. Many times you're the only person in the room. Many of us, and I included, remember examples of times when I would show up to a meeting and it was clear that the person on the other side of the table, if they hadn't met me, might not think that I was the most senior person in the room when I happened to be the most senior person in the room. And those are just small examples of what one might call today micro inequities, but they're due to stereotypes that many of us have about race.
So, as you imply, there are 1,000 little things that have left us in this position, and some, big, gigantic sort of historical forces. But what do you think companies are doing wrong, and what can they do right to actually change representation significantly?
I think that the work that can start now, and some companies have started, some other organizations are just getting started. But the first thing that companies can do is make this a priority. And by making it a priority, I mean not just to say it's a priority or donate. We're seeing a lot of donations, for example, happening right now, and conversations are being had. But for it to truly be a priority, it's got to be something that becomes a goal. I mean, nothing in our organizations would we say is a priority if there weren't goals and metrics and measurements associated with those priorities. So, my view is for companies to make progress, to move forward on this issue in a meaningful way, to make impact over time, we'll need to see companies set goals around diversity, and in this case, around African American representation. I think companies are going to need to set goals around the progress of African Americans and other minority groups inside the company in the form of advancement. I think they have to measure what's happening from a cultural perspective. And I had a great conversation with someone last week who said to me, when they dug into some of their engagement scores, and every company I know of does an employee engagement survey, if you look at that information by race, oftentimes you'll see that your African-American employee base feels less confident about their ability to not just work at the organization, but to thrive and grow in their careers at the organization. And that's a warning sign. And that's a good example of ways in which we can use metrics, we can use measurements to examine culture and start to figure out what needs to change.
Last quick question. We have about 30 seconds left. You're on the board of Snap and American Express. People with your background are in demand right now. I imagine you're getting a ton of inbound. How do you feel about that? Should we expect you to be leading another company sometime soon?
Yeah, I'm like many people today, spending time with my family. I'm also trying to navigate some of the challenges that are, out there with COVID and other things happening. But I suspect that, there will be some interesting opportunities that I'll be able to talk more about in the future. But for right now, I'm focused on my family, focused on sort of making sure that we're all safe and healthy. And as the world opens back up, I'll start to think about what's next.
All right. As you should be. Chris Young, former CEO of McAfee and advisor at TPG, thank you so much for joining us. Okay, coming up, cybersecurity top of mind with so many people and companies working remotely. We're going to talk to the CEO of Akamai about the future of work next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. With so many people working from home, the increase in internet traffic has also led to an increase in cyber attacks and an increase in demand for cybersecurity products, now more than ever. Here to weigh in on the industry impact is Tom Layton, co-founder and CEO of Akamai Technologies. Tom, good to have you back with us. First of all, what kind of activity are you seeing out there in terms of cybercrime, especially in the last 3 to 4 months now that we've been sheltering in place?
It's across the board. Just in the last couple of weeks, we've seen the 2 largest denial of service attacks ever. Bank in Europe faced close to 1 billion packets per second in an attack. We're seeing attacks to steal online accounts. They've doubled year over year. And with the remote workforces, with employees being at home, we've seen a factor of 5 increase in these devices going to malware sites. And that's because people are clicking on phishing links or going to the wrong site. And that's just in the last 2 months, a factor of 5 increase. So, the threat actors are very active right now.
So does that mean then that cybersecurity products need to catch up to a new threat landscape in terms of protecting workers and businesses, given that working from home is probably going to be a big part of the new normal?
That's right. And it's constantly a research effort to stay ahead. And at Akamai, that's probably our biggest effort in research is the development of new security capabilities so that these attacks are not successful against our customers. And I think, working from home opens up a whole range of new challenges for enterprises. And that's where our zero trust products are making a big difference today.
So how much more working from home do you think there will be as the economy starts to open up, as people slowly start to go back to work and school? How much is this working from home just going to be part of our new habit?
I think it'll be very substantial for companies where employees can work from home. I think you'll see a large fraction of employees continue to do that. We've told our employees that they can work from home for the rest of the year. And I expect, in the long run, maybe half of our employees will do that on a regular basis going forward. Sometimes employees need to come in, but for a lot of companies right now, they can work very successfully remotely, and that's safer to do, and in many cases more convenient for the employee.
So what has all this meant for Akamai? Obviously, you work with so many different kinds of companies of all shapes and sizes. I wonder how much exposure you have to companies like the travel industry, airlines, which have obviously suffered greatly, and what that ultimately means for your business, given that some businesses are thriving and operating just fine, but others are not.
Yeah, it's really tough on the travel and hospitality sector right now. And so in some cases, we've worked with them to adjust contracts, to help them through this difficult time. Actually, I thought it would be worse than it has been so far. And we'll have to see, what happens in the future. But believe it or not, people are booking flights, booking cruises and vacations. And I think, there is a lot of demand. People want to, get back to a normal life. And hopefully we'll be able to do that in the not too distant future.
Meantime, we're heading into an election, a critical election. And with that comes interference, foreign and domestic. What are you most worried about in terms of threats on the integrity of this election that could be perpetrated online?
Well, the election itself is not online, and that's probably a good thing right now. But where we worry a lot is about the information, the news sites, the social sites, and we help them prevent accounts from being taken over, the information from being corrupted or changed against their will. And that makes a big difference. You really don't want to see that happening around an election because misinformation can do a lot of damage.
Meantime, how are you thinking about the return to work for your employees and your own offices? What are you going to be doing differently post, and I say that with some irony, post-COVID-19?
Well, already we're beginning to open our Asian offices, and I think most of Asia Pac will be open over the next few months. Europe is sort of a mixed situation. I think things are tougher in the Americas right now. And we're going to be allowing our employees to work from home, throughout the rest of this year. And my guess is on a long-term basis, we'll have a lot of our employees continue to do that. We're very fortunate that we can keep our workforce very productive, during this time. A very small number of our employees need to travel to data centers or operation centers, but the vast majority can work successfully at home, and we're going to continue to enable that.
All right, Tom Layton, CEO of Akamai. Tom, always good to have you here on the show. Thanks so much for stopping by.
Thank you.
All right, coming up, a new, albeit potentially controversial commitment to diversity. Airbnb CEO Brian Chesky doubling down. Also, a years-long lawsuit with New York City finally settled. Just a couple of the topics in the rest of my interview with Airbnb co-founder and CEO Brian Chesky. That's next. This is Bloomberg. With renewed calls for diversity across the country at workplaces, Airbnb has decided it must change from within. Airbnb has now said 20% of its board and executive team will be people of color in a matter of time, and has also set new retention and recruitment goals for its teams to meet by 2025. It sounds a lot like quotas, which have long been seen as controversial. in the industry. In part 2 of my wide-ranging conversation with Airbnb CEO Brian Chesky, I asked him about this new mission.
There's many things we're doing. We're not just identifying targets, but I mean, I think diversity doesn't just happen. It's got to be intentional. Diversity does not come to you. The world's not going to come to you. You want to make a more just, equitable world. You don't just wish for it. You got to work towards it. And you got to sometimes do things that are a little unpopular and you need to press against it. We can either choose to be a mirror to the society that exists, or we can choose a different path to lead our way forward. I think that starts with looking in the mirror and saying we're not where we need to be and being honest about that and saying, okay, we're going to do a lot of work to get there. And so I'm not apologetic. I'm not going to apologize about trying to step into the future, even if it's going to be really hard. And I'll just tell you one other story. You know, we don't just have challenges inside the company, like probably every tech company does, but we're a platform. And our platform brings people together every day. And in 2016, there was a hashtag that was trended on Twitter. It was called hashtag Airbnb while Black. And it was Black guests, especially in the United States, describing being discriminated against when they were trying to book a home. Now, I will tell you, as one of 3 white founders in their mid-20s to start Airbnb, it did not occur to me at the time, I was naive, that our product would be used in that way. Had I grew up in other circumstances, then I might have thought that. So this was a wake-up call. And so we've been working for the last 4 years. And over the last 2 years, we've been working with Color of Change, leading civil rights groups and privacy groups. And we have this vision. We don't just want to measure anecdotes, complaints of discrimination. We want to measure systemic bias and discrimination on our platform. And then the goal is we want to open source our data, our learnings for other companies, because we don't need to be the heroes. We should just let people have a head start. And then hopefully we can redesign our products to be a little bit more equitable. So that's basically the vision. It's a long road. I never wanted to be a CEO that just puts up a Airbnb while Black on Instagram, does some big epic letter, and then I move on 3 weeks later. Because I feel like history is going to remember how tech companies reacted right now. And they're also going to remember, did tech companies sustain the effort over the coming years or not? And I want to make sure we're on the right side of history.
Now, how much progress would you say the platform has made since you brought Eric Holder in? You know, what is the data? Is this still happening, and how much?
It was a very low bar. We asked everyone on Airbnb to attest that they will not discriminate other people on the basis of race, religion, orientation, gender. And you know what? 1.3 million people chose not to check that box and not to participate. And I think we're better off because they weren't really committed to what we're committed to. So I think that I think we're in the beginning of a journey. I hope you have me back on the show and I can tell you about the progress we've made. I do commit that we're going to publicly report our progress. And that, by the way, is some of the best ways to make progress, when you know you're on the hook. And if you don't make progress, you have to tell the world. I'm not going to want to come back on your show and put out the data and say, Emily, I've made no progress. So that's some pretty good motivation. Now, this is a bit of a hypothetical. You asked a hypothetical. What would somebody say about focusing on this instead of growth? Here's what I'd tell them. Number one, I don't know who would want to work for a company that prioritizes growth over reducing racism and hate on their platform. You know, we internet companies this is a watershed moment. Internet platforms are not immune systems. We're not immune systems. That's the culture I came into Silicon Valley. And I think what's happening now is we're realizing we, the platforms, need to take more responsibility for the content that's created on our platforms. This is something that seems completely obvious. Now, the extent to you want to take that responsibility is going to vary by platform, but we better not think that it's up to government to decide what responsibility we should take, because by the time they enforce, the damage is going to be done. We have to be in partnership. The best thing for shareholders are companies, I think, who have consumers believe they're doing the right thing. This is both, I think, the right thing to do, but I also think it's quite self-interest for shareholders to do this as well.
All right. Well, in my own self-interest, I'll commit to having you back on the show so you can tell me about your progress.
Yes.
I've got 3 more questions, if you will. In New York, you just settled a major lawsuit with New York City and agreed to hand over personal data on hosts. This is one of your biggest domestic markets. It could cost you thousands of listings in the city.
How will this experience in New York change your relationship with other cities and your strategy going forward?
Well, New York has been a 10-year-long debate, and it's been the biggest holdout of any city in the country. Almost every major city, we've come to agreement. We collect hotel tax, and we're one of the largest collectors of hotel tax in the world. New York has been a market we have not had resolution until now. I think what COVID did is it led to a big reset moment, kind of for everyone, right? Like everything kind of felt like it got reset a bit. And so suddenly I think we in cities took a fresh look at all this. And we've come to an agreement that I think was months in the making. It's going to lead to a smaller Airbnb for now in New York, but I think we can rebuild from that. And I think it's an outcome that we all feel like we can live with.
Meantime, it all comes back to China. You are one of the few U.S. tech companies that still has a physical footprint in China. Google, Facebook, Twitter have all left or given up. How important is China still to you, and how much of a setback is the pandemic to your ambitions there?
It doesn't change our ambitions. It does change the size of the business for now. China's been hit very hard, and China has not recovered as much as other countries. And so our ambition's the same, that we want to bring to people, we want to help people connect in every country in the world. We don't want to cut out 1.4 billion people. I mean, that really wouldn't get you very far to bringing people together. But it has made us take a longer horizon because it's pretty, it's been definitely impacted. And, we're going to be, we're going to be pacing ourselves.
So you're still committed to maintaining the business there, given the challenges and the risks?
Oh, yeah. Yeah, we're committed to remaining in China, and it's just going to be a different pace than it was before.
Given all of these changes, what you've experienced, a pandemic that has changed the course of history and your history, Airbnb is bound to be a different company than it was going to be otherwise. What does Airbnb look like to you a year from now and 5 years from now?
I think a year from now, people are going to look at Airbnb, and instead of seeing just real estate, they're going to see host. They're going to say Airbnb is not just a marketplace, Airbnb is a community. And what they sell aren't just ways to save money while you travel. What they're selling really is connection. Now, these can be words. They can sound like empty marketing. I want to acknowledge that. I got to prove that. I got to deliver on that. I probably don't even deserve to use those words, except you're asking about what I hope to be able to say. So I hope a year from now, I don't even have to say those words. I hope you say that about us because we've earned that. And in 5 years from now, I hope that we go so much further, that we've created millions of entrepreneurs. More than half our entrepreneurs, by the way, are women. It's totally different than like other sharing economy companies that are dominated by men on the supply side. And I think we can provide economic opportunity for entrepreneurs all over the world, an entire creative class of people. I think we can help create educational experiences. I mean, a lot of travel is educational. I think we can transcend. And ultimately, I think if we're successful, I think that you're going to connect Airbnb to feeling like you're a little bit more connected to other people. I think I want it to be real connections, not just like digital connections.
We'll see if his vision meets reality a couple of years down the line when we have him back. Airbnb CEO Brian Chesky there. All right, coming up, it will be a catastrophe if President Trump is reelected in November. That's according to former presidential candidate Andrew Yang. The rest of my conversation with him is next. This is Bloomberg. The presidential election in the United States now just months away, and Facebook continuing to be caught in a debate about how to handle political speech and political advertising. In terms of advertising, Facebook has now given users the ability to mute or turn off political ads. Earlier yesterday, I spoke with Andrew Yang, former presidential candidate, about what this means and how Facebook should make decisions on these issues going forward. Take a listen to what he had to say.
Facebook is trying to have it both ways, and it has to face facts. It's at this point the most powerful and well-resourced publisher and media company in the world. And saying that they somehow can't account for what's true and what's not true, given that cable news networks, I'm sure Bloomberg and others, have said that, yes, we can take responsibility, doesn't make sense to me or to millions of Americans. It's one reason why Facebook is feeling this pressure internally, externally, to take responsibility, because at this point, they're not a scrappy startup anymore. They're the biggest publishing company in the world.
So what does that mean Facebook should be doing? I mean, should they not take money for political ads at all? Twitter doesn't anymore.
I think Facebook should do away with political advertising. It has to look up and say, like, who's winning and who's losing through this decision to take political ads. And the people that are winning are the people that have millions of dollars to target voters. That's not necessarily the way that we want our democracy to function. So I agree with Twitter's stance on this, and I feel like Facebook should follow suit. You can tell they're thinking about it because they've introduced that maybe you can turn political advertising off. But why not just turn it off for all of us? Maybe, like, who would actually choose to be subject to political advertising on Facebook? None of us.
Meantime, it's not just ads, it's misinformation, it's the polarization that social media creates, where we're all sort of discussing things in our own potentially political silos. How concerned are you that social media could undermine the integrity of this election once again?
I'm terribly concerned, just like many Americans are, because we know that foreign actors have used Facebook and social media to inflame division and sow misinformation, and we're not sure if that's changed. So we need to try and get a greater degree of trust and transparency in terms of how social media is interacting with our democracy. Unfortunately, the Trump administration has no interest in figuring out this set of issues. So we have to get Trump out of there, get Joe in, and then start to dig deeper and figure out how we can trust what we're seeing on social media. This is going to get even worse when you have deep fakes and other unfortunately innovations in misinformation that are going to make it harder and harder for us to trust what we see.
Right, that's already happening. I mean, just a couple of months ago, there was a faked Biden ad that was being promoted by the Trump campaign, and it looked totally legitimate. I mean, aren't those things only going to become more dangerous and more possible as we get closer to the election?
100%. And we have to get our arms around this problem while we still can, because it's unfortunately threatening to get away from us very quickly.
So then there's also the issue of mail-in ballots, and obviously President Trump has made his views on mail-in voting clear. How concerned are you about potentially other election issues emerging and not everyone getting their chance and their right to vote?
I'm terribly concerned, just like anyone who saw the lines in Georgia should be concerned. I mean, the voting is in less than 5 months. And if you don't have mail-in voting available throughout the country, there are many people who might not go out to vote. If they do vote, they might not have polls that they can access in a reasonable time frame. So I don't understand how anyone could be against mail-in voting, especially when you're looking at a pandemic. Anyone who thinks that's political is out of their minds. And even studies have shown that it actually helps both parties evenly. If you're going to believe in a democracy, you have to believe in people's ability to vote, and mail-in voting is common sense during a pandemic.
So what's next for you, Andrew? Obviously, you've got this data dividend project. Where are we going to see you emerge next on the national stage? Will you run again for national office?
Well, right now, my priority is helping Joe win in the fall. It's also helping local candidates around the country that are embracing the humanity forward vision for our economy, universal basic income, data as our property. And I'm happy to say that the first humanity forward candidate won his race in South Carolina. We have some people who are on the ballot tomorrow on Tuesday. So we're doing everything we can to advance our vision of the country, whether we're in office or not.
Now, I know Biden has the momentum in the polls. He raised more money than Trump in May. He's leading by double digits, but it sort of reminds us of the lead up to 2016 when it seemed like Hillary Clinton had it in the bag. I mean, talk to us a little bit about what is still at stake here, in your view, given that there's a very real possibility that President Trump could win this election again.
You imagine another 4 years under President Trump. It's a catastrophe on so many levels. We've lost tens of millions of jobs. We need to have a new Deal type initiative to help us revive the economy. And I don't think that President Trump is going to lead that. We need Joe to win. We need Joe to get into the White House and start this new Deal reconstruction type project. So I think Western civilization is genuinely at stake. in the fall. I think Joe is going to win, but we have to work our hearts out to make sure that comes to pass.
Former presidential candidate there, not mincing words, saying Western civilization is only at stake. Thank you so much for joining us. That does it for this edition of Bloomberg Technology. Bloomberg Daybreak Australia is next. This is Bloomberg.